All right, let's get started. If you're new to my channel, we go through stock charts, cover trade ideas, and I really try to point out what the charts are telling, at least telling me in my interpretation of the charts, so that I'm able to anticipate what's going to happen next. Not what's happening right now, but kind of what's happening next, or what has a high probability of happening next. So let's get right into it. Nasdaq futures. So yesterday in my closing video, I said we'll probably get a bounce. You know, we've sold off pretty good. And sure enough, here's your Nasdaq futures coming into a bounce. We're going to probably bounce up to the trend line. You can see here this uptrend line that we have right here. That's the most important trend line. I got to clean this chart up with these old levels. But I think the most important thing to pay attention to is the uptrend line. And that is just this rising trend line right here. We broke that yesterday, and we're having a kickback rally. So it would make complete sense that we would run up and tag that, do a back test of that. Maybe we do that today. I don't think it's going to happen today, but maybe sometime this week potentially, and probably reject at this level depending on when we actually get there. And that's what I see happening in the Nasdaq futures. Here's SPY futures ES. You can see here starting to make this downtrend line right here. We'll see if this holds. But if this doesn't hold, then we have also an uptrend line going back to June. And you can see uptrend line right there. We broke that trend line, so it would make logical sense to come back and do a kickback rally, test the broken trend line from below, and then fail, ultimately, is what I'm thinking is going to happen. I think we're going to test it and then fail. Let's look at the Qs. Same thing. Here's your uptrend line in the Qs going really all the way back to April. Nice clean uptrend line. So we're having a kickback rally, gap up and rallying. So it would make sense that we would at some point in time rally into probably this 286 level. I see that as some resistance right there. And you can see lots of reactions on that level. And if the trend line, it could easily come into that 286 level and tag that, reject, and then that would be that would be where we would fail on this back test and start to make our way lower, setting in new lows below this 269 that we just put in yesterday, breaking down. The reason why that I believe this will break down is the daily chart. The daily, here's your uptrend line in the daily. We broke that. That was a nice impulsive breakdown. So that's a sell signal right there that we had. Impulsive breakdown of that trend line. And now we're just doing a kickback rally. So this can happen. We can kind of work our way, kind of gyrate and consolidate a little bit, chop around before the next leg down. But ultimately, I think we head down to this 258, 260, depending on when we get there. Probably get a reaction right in there, consolidate a little bit, and then ultimately make our way back into the price channel. So going back to the Qs, looking at the weekly, here's your bull market price channel right there. We overshot to the upside on this melt up action that we recently had. And I think that ultimately we work our way back down and tag the bottom of this price channel. And then, at that point, we'll have to evaluate what the market looks like. But I think we are headed back down there. And from where we're at right now, that will be a potential, probably another 20%, 15%, depending on when we actually get there. And that would be, could possibly be the end of the sell-off in the Qs. We'll have to evaluate it as we go. But as I'm seeing it right now, we do a kickback rally, reject, roll over, roll over some more. And, it looks like flagging action to me. I mean, we don't have impulsive buying. A lot of the move that we saw in for today actually came in the gap up overnight in the futures market. And so we're seeing basically some, we had some impulsive selling, big moves down, and then we get kind of a tamer, more shallow bounce on lower volume like we see. And that's flagging action. That's basically what you see when you start flagging. You flag out on lower volume, and then you'll watch for the volume to pick up as you sell down some more. So it hasn't happened yet, and I could obviously see us coming and doing a kickback rally. But again, the other thing that gives me pause of a full kickback rally is the fact that usually when you have a trap, this gap down right here, we closed here on Friday, and then Tuesday, sorry, we gapped down. That was your bull trap. That trapped, that pretty much trapped anybody who took this last leg right here long. And a lot of the time they won't give them an opportunity to get their money back. So it's just something to watch for. But again, because we had the breakdown in the daily chart, I'm not really looking to game any kind of little bounce back up here because, I don't know when the selling will resume. We could kick back and have several kickback rallies for a while, even potentially breaking new highs. But as of right now, because of the breakdown of the trend in the daily chart, that's a sell signal on the daily chart. So that's a longer term sell signal. It tells me that there is going to be a bigger move to the downside, potential trend change. And I'd rather just establish a short position on the break of trend and wait for continuation. Gold here is doing another kickback rally to resistance. So here's this triangle that we've marked out on gold. We broke down. It wasn't that impulsive though. So we broke down. We've had a kickback rally here. Didn't quite get there on this one. Came close. And then another kickback rally here. We're just consolidating underneath that resistance. Has not been rejected yet. So we got to wait to see if this is going to actually sell off and reject. The dollar, the dollar sold off a little bit today, but it's holding its ground. Could be flagging. This could be a bear flag, and maybe it wants to head back down and do a full back test of the breakout. If that happens, gold will probably move higher, so we're going to watch for that. But the dollar has broken to the upside, so until that's negated, it is a breakout, and it does look like it wants to head up to this 95 area. And in case you're new, if you want to see where I get the 95, just look at the weekly on the dollar. DXY is what I'm using here. And you can see going back to 2011, we've got nice big support right there in the dollar. We broke that support recently, but I'm expecting a kickback rally up to that 95. And then we'll probably reject right there. I don't expect the dollar to go much higher. I think we'll probably hold there and then start to work our way lower. In a longer term bear market for the dollar is what I'm expecting. And just to kind of reiterate my point, even though the markets are rallying today, I see it just as a kickback rally, kind of a counter trend move. The trend being down now because that uptrend was broken on the daily chart. So the trend is down now and we're having a counter trend move. And that's common to see, especially when you get that first initial breakdown. A lot of people just rush in to buy the dip. They don't realize the trend has been broken. So it usually takes more downward pressure from the highs to for the masses to realize. So oftentimes when moves start, trend moves, they start small and gradual, and they build as time goes on, as more and more people realize, as they realize that the trend has changed. So it's pretty common to see that we have this initial kickback rally after that first leg down. But the point is, Apple, largest stock in the world, I believe that's still the case, below trend right here. You can see we're trading below trend. So even if we have kickback rallies, we're still below trend. As long as you're below this uptrend line, then you should at some point put in, start creating the new trend to the downside. So Apple's below trend, Microsoft below trend, Amazon below trend. Amazon's kind of flagging out. I started to mark out a flag. It looks like it's just kind of bear flagging, but Amazon below trend. Amazon has a longer term trend. If I go to the daily, there's this bull market trend. So, but that's 30% down from where we're at. So below this short term trend here on the daily chart, you can see Google below trend right there. So all the fangs are below the most recent uptrend that we've had going back for a little while. Apple's trend actually goes back to March, and it's below that trend. So all the, many of the fangs are below the trend that they've had, for the rally this year. And, that tells me that trend is now finished, and we're looking at either a sideways consolidation period or a reversal and, you know, a downtrend, start of a new trend to the downside. And I'm keeping an eye on Tesla here, because Tesla, I feel like, is somewhat of a bellwether for market sentiment and kind of the mania that's been taking place in a lot of these stay-at-home stocks. I don't know why Tesla became one of those, but I think it just really plays into the fact that it really just goes down to, is there an abundant amount of market speculation or not, basically. You know, gambling. Are people basically buying something based on the fact that it's going higher without any care as to fundamentals or really anything besides the fact that the price is going higher or not? And so Tesla, I think, is a bellwether to help gauge that, and that should, you know, eventually unwind itself, the speculation. And here's what we got on Tesla right now. This is what we saw, this ramp up in Tesla, this crazy ramp, really going back to March. The thing was up from the March lows up 600%. So a massive rip higher. Became way overbought, became way out of whack with any kind of fundamentals. But, you know, again, momentum can just continue until it doesn't. So you just have to kind of wait till it finishes. And sure enough, here we over the last few days, we had the breakdown. Here's this trend line from the March lows. Couple reactions. We've got one, you know, here, there, and there. So 3 reactions. And you can see we're getting some more reactions today. And so yesterday we did actually break that trend, closed below. Today they gapped it up, and we're at back testing right now on the daily chart. You can see it's just barely hanging in there. If I go to the hourly, you can see we're just back testing here, failed, coming back in for another back test. So we'll see where they close this thing. You know, most likely they're going to probably close it right at the trend line, keep everyone guessing in terms of whether this is, you know, going to recover support or fail, and that will be that. But if this can't recover, or let's say they close it right at the trend line tomorrow, maybe they gap it up and it instantly sells off, that would be your signal or your tell that that it is going to, or it should move lower. So we'll watch for that. And that's really all I have for this video. I'm going to kind of keep it short. There's just not a whole lot going on. In general, we're getting a bounce across the board indiscriminately for the most part. Everything's bouncing off of, you know, really oversold levels. I mean, we sold off pretty rapidly from the highs. So we're getting a bounce. And after this bounce is finished, we'll look at what the next move is. In my opinion, I think it's lower. I think we get another leg down and start to put in, you know, lower lows, basically. So we'll watch for that. And thank you for following along. Catch you guys on the next one.